You've heard from our experts. Now let's hear from the shareholders. Malcolm Ethridge of Capital Area Planning Group, Jason Snipe of Odyssey Capital. Both are CNBC contributors. Both own Amazon and Apple. Gentlemen, it is good to see you both. Malcolm, you first. Which one are you waiting on most?
Yeah, I think that we probably already know the way the story is going to go as far as Apple is concerned. They're still behind on Apple Intelligence, and they're probably going to have a tremendous headwind that reports in this quarter that we're currently in with regards to iPhone sales, especially in China, as Alex just got done saying. So I really care more about Amazon's report right here. Amazon really needs to show a number that's comparable to what Microsoft reported in order to just satisfy the street in those expectations that were actually higher for AWS than they were for Azure. Otherwise, I think we could actually see those shares sell off after, I guess, at the open tomorrow, simply because the headwinds with tariffs related to the retail side, we already expected to be pretty strong. So Apple's report is going to be really important tonight.
Yeah, Jason,
Amazon.
I hear you. I know what you mean. Jason, Amazon's like, oh, Microsoft, you really had to do that. You had to blow the doors off.
Yeah.
Azure had to look like that because now we have something even bigger to live up to with AWS.
You're right about that, Scott. I mean, Azure 35% growth year over year. I mean, that was a dramatic blowout quarter, obviously. So for me, as it relates to you, and the reporter already mentioned it earlier, 20% is the whisper number, 17.6% is the number that we're looking at in research reports. But for me, you know, they're the largest cloud player in the game, so that's definitely going to be an important number. That's what the street is very interested in. As it relates to retail, I mean, my concern is around third-party sellers looking to increase pricing due to the macro and obviously tariff exposure. So that's going to be concerning. And then, you know, 50% of their third-party sellers are in China. So that is also a concern from a macro perspective. So I'm curious to see how that plays out. The ad business has obviously been a nice business. It grew almost 20% last quarter, and it's very accretive. It's obviously high margin business. And Alex mentioned, you know, some of the concerns there. So that's a number I'll be watching very closely as well, you know, as we kind of see what this whole thing looks like as the print comes here.
I feel, Jason, there's a much bigger unknown with Apple. And maybe it's just me, but all the issues that are at hand as we speak, demand, tariff, China, supply chain, the questions that Tim Cook's going to get to respond to some of the rhetoric out of the White House and elsewhere.
Listen, Apple is absolutely in the eye of the storm. You know, 17% of revenue comes from China. You know, that is definitely a concern with all the geopolitical and the trade war that is going on. There's no doubt that supply chains potentially will be an issue. 90% of assembly is done in China, so that's definitely a concern for me. And then, you know, we talked about the probe earlier. I mean, we've been reporting about it a lot throughout the day. This could dramatically affect the services business. I mean, the services expectation growth is around 12% for this quarter, but there's a workaround to get out of that ecosystem, and there's another pay for somewhere else. That is a dramatic development for Apple going forward. So that is something definitely to watch for and see how that story continues to mature.
Yeah, what about that, Malcolm? You didn't mention that at all. And few people have today because we're so hung up on the issue at hand of tariffs and the huge amount of revenue that this company gets out of China. We're not even focusing on the courts.
Yeah, so I think that it is important that we consider how much the regulatory issues that Apple and Meta and Alphabet have right now. But it's really tough to even look that far down the road because we're talking about potential breakups. We're talking about potential appeals that could overturn decisions or alter decisions that have been made. We don't even have the benefit of looking that far beyond where we are right now because the tariff situation is still very alive and well. And so we have to at least consider what's happening right now with 145% tariffs against American goods for a company that its flagship product, about 80% of that flagship product is coming out of China. And that is the problem we have to focus on right now as it relates to Apple. Everything else is a fight for tomorrow.
I want to hear from you both on this question, but Jason, you first. What have we learned, do you think, so far from the 3 of the 5 big ones? We're not counting Tesla, it's already done. And we're not counting NVIDIA because it's yet to come. But from what we've gotten so far about AI spend and the key questions that you both wanted to get out of this group, did you learn enough?
So AI spend is obviously healthy. You know, both folks have kind of reiterated the CapEx there. So and cloud obviously has been very healthy. So I think there was a little bit of concern kind of coming into this quarter and what that would look like. So I think that has been very productive. And I think that's why we're seeing some of the positive. The other thing I would say, which has been interesting, is search. Search and advertising has been positive as well. Hearing from Google, hearing from Meta, those names have obviously responded, you know, to the advertising numbers. So in general, I mean, these names have responded very well, and we're seeing that the ad spend and the advertising businesses have been healthy. So I think that's been a net positive for sure.
Malcolm, how would you answer that same question?
Yeah, Scott, I don't think that we're completely out of the woods yet, right? There's not an all-clear signal for the entire market or even the tech sector specifically. But I definitely think that we should at least get a big sigh of relief that these earnings so far have been better than feared, right? If we consider the fact that we were having a conversation maybe 2 weeks ago about whether guidance was going to be pulled or altered or adjusted. Now we're talking about companies coming out and blowing it out of the water. You got a 50-year-old tech company in Microsoft showing double-digit top-line growth, also a 10% increase in share price in one day. That does not happen. And so you have to couple that with the fact that Meta actually stood firm and increased how much its CapEx spend is expected to be by about $7 billion for the year. I think that sounds very good for a space that Wall Street analysts have had a number of questions about whether they've gotten too far and they're overbuilding and overspending and everything else. I think that we got an answer to that story. So for the long term, I think that the money they're spending to build out those suites are definitely proving it. I think that also there's the danger of underbuilding, which Apple might actually be experiencing right now. So I think that we're in a pretty good space, but I definitely don't think that it's an all clear for markets broadly here.